Hi, everyone. Listen to me, because this is about the money you've worked your whole life to save, and more importantly, it's about the people you love. You buy life insurance for one reason: protection. You want to know that when you are no longer here, your spouse, your children, or your grandchildren are going to be okay. You pay those premiums month after month, year after year, thinking you've punched your ticket to security. But I want you to stop right there. Because if you aren't careful, if you are standing there holding that policy in your own name, you are setting a trap for the very people you're trying to protect. You think that just because life insurance proceeds are generally free from income tax, they are free from all taxes. That is a mistake. And it's a mistake that could cost your family 40% of that death benefit before they even see a dime. Do you understand what I'm saying? If your estate is large enough, the federal government views that life insurance payout as part of your wealth. And when you die, they want their cut. We are talking about the federal estate tax, and in some cases, state inheritance taxes. You've spent a lifetime being a responsible person, saving every penny, and now, at the finish line, you're going to let the IRS become your primary beneficiary? No! Not on my watch. The fear many of you have is real. You're worried that your kids won't be able to keep the family home because the tax bill on your estate is too high. You're worried that the gift you left behind will be swallowed up by paperwork in government hands. And the question you should be asking yourself right now is not, do I have enough insurance, but who owns my insurance? If you own the policy, if you have the right to change the beneficiary or borrow against the cash value, then you have incidents of ownership. That means it belongs to you in the eyes of the law, and it's going into that giant bucket called your taxable estate. So, what is the actionable takeaway? How do you fix this? You have to give up control to keep the money. You need to look into what we call an ILIT, an Irrevocable Life Insurance Trust. When you create an ILIT, the trust owns the policy, not you. You can't change your mind later and take it back. That's why it's called irrevocable, but because you don't own it, it isn't part of your estate. When you pass away, the insurance company pays the trust, and the trust distributes that money to your family, 100% tax-free. No estate tax. No inheritance tax. Just the legacy you intended to leave. You need to sit down with a qualified estate planning attorney. Don't try to do this on a napkin. You need to make sure that crummy powers are handled correctly so your premium payments are considered gifts. Stay safe, stay strong, and for heaven's sake, protect your legacy.